Welcome back to Economy Assam's coverage of the top scams that rocked India. This is scam number 2, and I'm your host Abhijit. I'm sure most of you may have watched Scam 1992 by now.
देखो मैं सिगरेट नहीं पीता पर जेब में लाइटर जरूर रखता हूं धमाका करने के लिए
We all saw how Harshad Mehta and Gromo Investments managed to find loopholes and rigged shares in Asia's oldest exchange, the BSE. Yes, many people, including the ones that were part of Gromo Investments, made tons of money, at least for a while, or at least till a journalist decided to blow the whistle and the authorities took action to plug those loopholes. The entire game was to do with using bank securities and letters of credit. But this story is neither about Harshad Mehta nor Gromo Investments. It's about another person who wasn't really featured in the series, but was also a part of Gromor. Not many people have heard the name. However, he too played a game in the share market, albeit a different one. Before we go on, there is a disclaimer that we must make. All content submissions in the series are either based on data available on the public domain or collected from various platforms that are hypothetically relied upon. The purpose of the series is to promote by all means truth alone triumphs, or Satyameva Jayate, and not to promote occurrence of any scams. Through this series, we don't intend to either demonize or condemn or pass judgment on those who've been involved, but only to try and create awareness of how some people can find loopholes and misuse the laws of the land and use our gullibility for selfish benefit. Some of them do it just for the money, some for the power, and some just because they think that no one would notice anyway. His name? Raise your hand if you've heard of Ketan Parekh. Yes, he too was involved with Harshad Mehta, but he didn't get caught in the scam because he was just an employee of the company. Now, why is this scam just as interesting as the Harshad Mehta one? For starters, Mehta used loopholes in the system, whereas Parekh actually indulged in malpractice. Next, the magnitude of the scam was much bigger than Mehta's. Last but not the least, Mehta more or less stopped trading once the scam was broken. However, it's believed that Parekh still plays the game, although not in his own name. What kind of malpractice was he into? Well, actually, plenty of things. The list includes A. Insider trading, B. Price manipulation through circular trading, C. Embezzlement using bank pay orders, D. Fraud. Now let's take a look at how he started and what he did. To get to know the person better, it's always better to profile him a little bit. To start with, Parekh was a qualified chartered accountant who joined Gromor as an intern. He came from a pretty well-to-do family who was already in the finance industry in various capacities, mostly stockbroking. Ketan Parekh, like his mentor, was more bullish in nature, meaning he liked to inflate the prices of the stocks and when the shares reached an optimum price point, dump them, eventually leading to a crash. Post the Mehta scam of 1992, a lot of regulations were put in place at the BSE, which meant that now Parekh had to find a new playground. He started off with the Calcutta Stock Exchange, where the regulations had not yet been implemented and where the trade volumes were much lower than BSE. Now, towards the mid-90s, there was something called a dot-com boom, where many companies were beginning to enter the tech domain. In a way, you could call it a precursor to today's tech-led world. Also, with cable TV proliferating in the country, the entertainment industry was the next best thing. Parekh started by identifying such companies that were primarily in the information, communication, and entertainment sectors that showed promise and began hedging his funds on such companies. He had a favorite of 10 companies in this domain, which later came to be known as the K10 stocks. These stocks were prized possessions mainly because they managed to yield returns of up to 300% at times. Well, Parekh's influence grew, and he became most people's favorite stockbroker. He was soon approached by other companies that wanted to jack up their share prices, and the companies were only too willing to offer him an extra incentive. This is FYI. Back in those days, one could take loans against shares, a practice that has since been stopped by SEBI or the Securities and Exchange Board of India. So, any company in need of liquid assets could approach Parekh to ramp up the share price. Once this was achieved, the company could approach banks and take loans offering the shares as collateral. This is where Parikh's game began. He started what is called circular trading. What is circular trading, you may ask? Let me explain that to you in layman's terms. Imagine you own a company and its shares are listed on the exchange. People trade in your shares and the rate keeps fluctuating. You want the price of your shares to go up, so you approach someone like Parekh and offer them an extra incentive. Parekh forms a consortium of brokers and parts with a part of his earnings to put in orders to sell and buy your shares at exactly the same time within the consortium. This automatically creates a hype that a share must be really valuable and in high demand. Seeing the volume of demand, investors think that the company is in some kind of huge profit or is about to make an announcement where people can make a lot of money. The result? People start buying your shares, thus driving up demand. And as with all commodities, when demand begins to exceed supply, prices go up. However, if you've noticed, it's nothing else but a bubble, and people get caught in a hype that is created for selfish interests. Who wins? Mostly it's the broker who's always in a win-win situation. Not only does he make money out of every trade, but he also walks away with a hefty incentive from your company. That's circular trading to you in a nutshell. Now, to start trading in large volumes, one also needs funds. That was easy for Parekh. He already had a lot of institutional investors on his contact list thanks to his family background. Now, institutional investors are usually insurance companies, mutual fund companies, and the likes that are flush with public funds. The ones that agreed to be a part of Parikh's plans automatically invested in the shares that he suggested. The others? Well, when they didn't want to buy into Parikh's plans, they got caught in a bubble that was created by circular trading and eventually pumped in the money. After all, every company that utilizes public funds wants to offer their clients the best returns. With institutional buyers in his grasp, Parekh next targeted banks. Why banks? After all, there is a limit to how much of personal funds one can use. Now, there are two ways in which he could get funds from the banks: A. Loans, B. Pay orders. With his shares doing so well, it was easy for Parekh to obtain loans against those shares. Banks were only too willing considering the value of those shares. Again, FYI, those days, banks could extend loans of up to rupees 15 crores to stockbrokers against shares. Two of Parikh's favorite banks were Global Trust Bank and Madhpura Mercantile Cooperative Bank. Over time, he built such a rapport with the banks that he started to pick up equity in the banks itself. Not only that, the banks started to extend unsecured credit to Parekh. Well, mostly on a promise that he would offer an equivalent value of shares at a later date. Kind of reminds you of Harshad Mehta's bank receipt game, doesn't it? Only that, this time, Parekh was playing with depositors' money. Whenever these two banks lacked the funds, what he'd do is pick up pay orders from these two banks and take loans against those POs from other banks. This in itself was actually illegal, and I'm sure you'll be able to figure out why. One such bank that he managed to take a loan from against a PO from Madhpura Mercantile was Bank of India. What happened? You'll soon find out. Everything went well for quite a while. Party could take pay orders when there were not enough funds, take loans against those POs, pump the money into the market, jack up prices, sell when the price was at a high, return the money to the banks, and so on and so forth. The cycle went on. Now remember we spoke about those dot-com companies at the beginning of the video? Well, the hype and the hoopla died down at a global level, with its ramifications being felt even in India. People began to offload their dot-com company shares and prices began to drop. At the same time, Bank of India filed a complaint with the CBI alleging that Parekh had taken rupees 137 crores from them against a pay order from Madhpura Mercantile, which returned unpaid. Yes, that's exactly what happened. All this happened simultaneously in 2001. Although Bank of India tried to extract the money from Parikh's other accounts, they found that he had conveniently siphoned off most of the money. That's what led the bank to file a complaint with the CBI. Inquiries were conducted and Parikh was arrested. Before that, there was even more trouble at hand. His consortium soon found that with share prices dropping and no funds flowing in, it was difficult to hold on to the shares and they had to settle all their accounts. At the end, even they had to sell whatever shares they held and settle their accounts. Again, inquiries were held and Parikh was charged on many counts. Although he was arrested, he didn't spend much time behind bars. At the end of it all, it was found that the value of the scam was worth about rupees 40,000 crores. Like I mentioned at the beginning of this video, this scam was worth a lot more than Mehta's. It's not that Parikh walked away with that kind of money. Although he did make a substantial amount, many institutional investors went bankrupt, as did thousands of retail investors. Global Trust Bank lost about rupees 250 crores and was eventually amalgamated with another, while Madhvpura Mercantile, with losses of about rupees 950 crores, had to shut shop for good. And what about Bank of India's rupees 137 crores? Well, they got most of the principal amount back with another about 1 crore after a long drawn court battle. What happened to Ketan Parikh? Although he did serve some prison time, it wasn't for too long. However, he was banned from trading at any of the stock exchanges in the country for life. He did make a brief appearance in 2009 when it was discovered that Ketan Parikh was still active on the bourse under an alias. Charges were filed and he was behind for a while, but only for a while. It's believed, though, that he's still active. This scam, though, made SEBI and RBI initiate some more changes like A. Banks were no longer allowed to lend against shares. B. Cooperative banks could no longer lend to stockbrokers. C. Instead of RBI auditing co-op banks once every 2 years, changed it to a biannual audit cycle. D. Trading settlements were to be made within the day from the earlier 15-day window. Although the ending of the scam isn't what you expected, well, that's how the laws of the land work, and we need to respect that. However, it just goes to show that there are a lot of unscrupulous people out there who'll do anything to make a quick buck. So remember, investments are a necessity to keep your income steady. However, it's always advisable to take calculated risks instead of allowing a herd mentality to kick in and jump in without thinking things through. Our aim is not to scare you away from investing, but only to keep you aware of what could happen if you aren't aware of where your hard earned money is going.
My name is Abhijit, and I've been your host for this program. If you want to see interesting content like this, don't forget to hit the like button and also subscribe to Economy Assam to stay connected. Goodbye, see you soon.